Ladies and gentlemen, welcome to Scania Capital Markets Day 2013 here in Södertälje. Also a special welcome to you watching this over the web at our webcast. My name is Henrik and I have the pleasure to guide you through the presentations this morning. We have divided the day into two parts. We will start here by listening to Scania's executive board, and then in the afternoon, for you who are here, we'll have the opportunity to learn more about Scania Streamline, our China strategy, and how we do advanced testing in different climates. We will have a break in approximately 1 hour, and we plan to finish here around 11:40. And by that, we start the presentations. We will discuss the long-term outlook for Scania, and by that I invite our President and CEO, Martin Lundstedt, up on stage. Please, Martin.
Thank you, Erik. And also from my side, most welcome to Scania, to the Marcus Wallenberg Hall. It's always a pleasure to have you here at the heart of Scania. And it's quite interesting to see a film like this also, that we are always, when you're working with this 24/7, you're always getting pretty proud actually. And once I told my wife that real beauty is a well-functioning logistical system, but that is maybe a little bit to exaggerate, I don't know. Nevertheless, today we will talk about Strategy 2020. Where are Scania heading? Where are our opportunities and where are our core assets to succeed? And I would like to start with two very important cornerstones for Scania that we would like to underline. And the first is our core values. We have been working with our core values for many, many years, and they are really into the daily operation of Scania, how we operate this company. The core values for Scania is, of course, customer first. We are operating in a B2B business with very close relation with customers. We have a broad customer base, meaning that they are operating in different environments, applications and industries, and we need to know the different aspects for every customer. Every customer has a face, as we call it, and we need to tailor the solution here. Respect for the individual goes about how can we develop our people, how can we develop the competence, the motivation, dedication for our brand, not only the direct employees, but also our wide range of network, such as the supplier base, but also our network of partners that are selling and servicing Scania around the globe. But it also goes about having a close dialogue, what we need to do in order to maintain a good level of flexibility. As you know, the world is getting more and more volatile, and I think you at least see it as well. And that means that we also need to cope with these variations in demand, in supply, be flexible, and keep the lead time short. And everything goes about quality. Quality is still the base, both in hardware, in the service quality, to be able to do this journey, to be a more integrated part of the customer's business. The other cornerstone is our business model. The business model, and we have put it in this way, I think you will like that. We have two income statements here. And we do that because this is how we operate together with every customer. On the left side, you see the income statement for a customer. And there you have an endless variation depending on what industry application segment the customers are into. How we can affect that income statement is what builds our brand over time. Of course, customers are proud of our product. We see that also when we are out in different exhibitions, that Scania is well overrepresented, but it's coming from the fact that we have delivered on the income statement over the years. What can we do for the customers' revenues in terms of uptime, more and more when it comes to emissions, sustainability issues from their customers, and what can we do on the cost side? On the right side of this balance, you see what Scania's revenues and costs are in relation to the specific customers. And the more integrated we be, and we see that journey, we will come back to it, the more actually this develops into a partnership away from a supplier-customer relation. Because that is the new world coming up. 2013, we cannot afford sub-optimization anymore. We must work in the flow. We will come back to this. Christian and Henrik heading the two main parts of the commercial operations of Scania. or the sales and marketing and commercial operation will dig into this. What does that mean when it comes to our service offering? What does that mean when it comes to our network expansion? What does that mean when it comes to our revenue opportunities? Not only for the hardware sales, but also increased engagement per vehicle and per customer. So I want really you to have this slide in the backbone. This is how we are building the brand going forward, and also business opportunities. Often you say, but can you think like this in some segments, some markets, some applications? Yes, you can. Because markets will grow, markets will mature, markets will develop. And I will come back to what we see when it comes to patterns here, but we are very clear. What we see is that we can be the premium supplier of transport solutions where utilization of equipment is high. And given the fact that you see a more global world, you will also have a necessity of improving the logistical efficiency wherever you are or in whatever industry you operate as a customer. Therefore, we say we stick to what we know when it comes to the supplier or the supply of the hardware. We are in the heavy end. We see that the trend of volumes are moving to the heavy end. Above 16 tons, above 12 tons, we are using the leverage also for customers into the industrial and marine engine applications, and we are building that on a long-lasting tradition of modular thinking. Modular thinking is nothing that comes for free. It's a thinking that is implemented over years, not only for the hardware, but also more and more when it comes to the software. And there are 3 very simple rules. I will give it for free for you today, because it is like it is like a TPS. It is like lean thinking. You can read tons of books, but to implement it, it's a journey, it's a mindset, it's a leadership issue. For the modular system, it's the following: standardized interfaces, well-defined performance steps in between the standardized interfaces, and the last one, same need, identical solution. That is giving scale for real. Think about it. Scania, we have scrutinized now over some months together with the global organization where we stand. We have done a top-down analysis of the macroeconomics opportunities we see, but we have also done a bottom-up analysis from the markets, from the segments, from the industries, and we are coming to a very clear scenario for Scania. We will grow, and we will be somewhere around 120,000 trucks, 15,000 buses, and 20,000 engines at 2020. But we will also increase our share of services as a part of the top line, not only because the fleet is growing, but also that we are doing this integrated journey with the customers. So this, we will come back to how will this happen and where will it happen. We have iterated a couple of times how we will do it, and this we are going through market by market, application by application. The 4 on the right side you recognize, that are how we drive the hardware sales. Grow with the market, given, if I may put it a little bit simple, that the GDP growth is driving the market and we are keeping the market share as it stands today. It's not a walk in the park, we know that. But given that we do that, that will give a proportion of our growth. Second is increased market share in selected segments. And here, between 2000 to 2011, we have had certain underperformance, but we have seen lately now that we are regaining market shares in important segments and market areas. Increased market share was the second. Enter into new customer segments. We have seen the entry into what you call the light part of the mining industry, that we call the heavy applications for Scania, has been very successful. We see now how more advanced BRT system is coming into play because public spending cannot just afford to do things that is not giving any other results than a BRT system. And that is good news for our industry, bus rapid transit in the urbanization pattern. And then enter into new markets as well. We have been fairly successful over the last 10 years in Southeast Asia, in Africa, in the Middle East region, and also in Latin America, and that will continue. But the first one, increase sales per vehicle. That is what we're heading for and measuring even more concrete now. And that will bring us from the 20-25% share of top line we have today up to the 25-30%. It will not come for free because increased sales per vehicle is only a matter of trust in our relation with the customer. How do we divide it then? You can say, given the 4 market blocks, or the 4 growth blocks as I described on the previous page, you can see that for Europe, we are believing a compounded annual growth rate up to 2020 of some 5%. GDP, as you know, will be pretty modest in that growth, but that will drive some. But the majority, of course, is that we see a replacement need coming up. We see an aging fleet, and we also know that with the last moves we have done, we are able to increase our market shares in selected segments, and that journey, it will not be big steps, but it will be a stepwise journey also going forward here. For the other market areas, you see that the GDP proportion is higher due to the fact that the GDP growth is higher in those regions. But also the green part, and that is how those markets will mature, is also bigger. Interesting, can start with Latin America here. Why is that not bigger when it comes to the maturing of the market? And that, the simple reason is that we have lately seen a pretty fast growing into the more mature way of designing transport solutions. And therefore, up to 2020, we believe that it will be a high growth rate for our segments and for Scania as a total, but at the same time not with the same change in structure as we will see, for example, in Asia, compounded by China, to some extent India, but also Indonesia, etc. The Middle East countries are also included in the Asian figures, and there we have a strong position. That development will continue with the political stability coming back. Eurasia, still a lot to do. And I think this is an interesting example to take here. What happened year 2000? There were a couple of 100 units, maybe 1,000 units, available market for us. And already at that time, we took 25% of the relevant segments. 2012, the relevant segment, due to the majority of the transport sector and the logistical, has grown to 25,000, and we have still 25%. So moving into China, Indonesia, Brazil, we have seen the same journey, by the way. It's about taking the right position in the sophisticated segments, the sophisticated customer base from the start and grow with them. Otherwise, we will leave what is our core, and there we are not competitive to really leverage the structure that we have. Africa is also interesting, but I know Henrik will come back to it in more detail, so I leave it with this. But this is the thinking, so to speak. Just to give some relations, what this is all about. Here you see trucks per million inhabitants of the heavy and the premium end of the market. And on the x-axis you have the GDP per capita in different countries. And this is quite natural actually, because what is happening here is that in the first phase you have some sort of domestic solution. That we saw in the Scandinavian, in the European countries as well. You were some sort of, first of all it was a horse and a wagon, but then also with the chassis development you were specialized in small regions. You didn't do the cabs, but the cabs were done by the local company, etc. And then suddenly something is happening. There is a consolidation because the demand from customers, from the logistical system, are starting to increase. And the first step is often that the international players are moving into the country. We saw that for Eastern European countries. We saw that in Southern Europe in the late 90s. And what is happening then, when the international players, both industrial footprint, it could be bigger retailers, it could be the big petrochemical companies, they are taking with them their logistical thinking. Of course, as I said in the business model, there are parameters that are different. You don't have the same interest rate, maybe not the same taxation on fuel, maybe not the same salary level. But the thinking of total operating economy is the same. And thereby also our ability to tailor-make will start with those international players. And that we see now coming up in some cases in China, for example. Next step will be that this is spreading into the domestic sector, of course, as well, because the domestic sector needs to compete with international players. And thereby you are changing the logistical system. Here you see the potential still. Brazil, with its wide distances, also commodities and agriculture products, of course, are a little bit higher on the scale. But the shift in Brazil has been pretty quick, and that is also explaining the gain in market share we have seen over the last years, and also our entry, and in some cases, re-entry into some segments. And also the shift coming up when it comes to more and more heavy solutions. You see still the fantastic potential in China. When and how will it come? It starts now, slowly. We have seen some customers, and it's clearly just-in-time flows, time restrictions, high utilization. It starts also with the standardization of emballage, that you have a more efficient loading, unloading time. It is a production flow. Another way to describe this is the GDP, total GDP, and the logistical part of the total GDP. And as you see, Europe is very efficient. Fun enough, there are a lot to do in Europe also in the logistical flows. I will come back to it. But still, in an international perspective, we are efficient. 7%. Then, of course, one can argue, okay, China is natural because they have a more manufacturing footprint. That is partly true. But the main issue here is a logistical efficiency lag. Leadership has addressed that, of course, and said in the new 5-year plan, we need to open up, international players allowed, for the logistical solutions. We need to have a consolidation. We need to get mileage up. We need to take care of our environment. We need to be competitive. We cannot just let go the logistical part of the competitive chain, so to speak. If you look into a Chinese factory, I think I disclosed that already last year on the Capital Markets Day. You see Western European, you see German, you see American machines. It's the same equipment used as in Europe today. But between the factories is still, a lot of fantastic things to do. And that is giving the opportunity. And that is also what is seen by the big players now. They cannot just afford to wait 2-3 days. They must have extra stocks. They cannot guarantee the supplies. And at the end of the day, the competitive position will not be there. Here you can see Brazil. Brazil, 12% is not that far behind. It used to be just a couple of years ago, some 14-15%. And the shift has continued. And that is what we see. We didn't see that clear a couple of years ago, but now we just realized that both the introduction of Euro 5, meaning also that this investment cost is equal if you talk medium and heavy trucks, but also that the big players, consolidation also for forestry and pulp and paper, agriculture, mining, etc., is continuing, and also an increasing middle class. India will take time. That is only 15% in India because there are so much inefficiency in the other parts of the systems as well so far. So that must, I think it must come up to some 20-21% and turn before we will see that logistics will be priority. You have a federal structure, etc. There are selected segments that we believe in, and we'll come back to it. Okay. Then Brazil, coming back to this. What is happening? And then you can see this trend. In 1980, 5-10% of the total product mix in Brazil was above 16 tons. Today is 60-65%, and the trend is continuing. It's simple because when logistics are developing from flatbed systems into truck and trailer systems, and more standardized container transports, pallets, etc., this is what is happening. This is the business logic. And that will continue in Brazil. We will see on the next slide that they are lagging approximately 20 years in relation to Europe. 2012, here you see 60-65%. There, Europe, we were there approximately 1990. But we also continue with the same trend. Of course, it's flattening out, but the trend continues. The next thing is actually that the really light commercial vehicles are also increasing because of the hub and spoke system. If you take then Europe, you see the same trend, even if it's not as pronounced because we had the maturity level already 1990 with 40%. It's down now to some 25%. The rest, and 75% then are heavy truck solutions for the main goods flow, so to speak. Interesting to say is also here, it's above 16 tons. It's quite big segments as well for us. I mean, living 24/7, as I said, with these type of solutions, we know that 16 tons and above, there are a lot of segments. And if you go into the more granular analysis of this, you will see that it's also moving upwards in the gross combination weight into the heavy segment. Finland just shifted from 60 ton up to 76 ton, because we see more and more clear relation that heavier equipment will not cause any other negative by-effects, rather cause positive effects when it comes to CO2 per ton kilometer, fuel per ton kilometer, less traffic jams, better mobility. Application strategy we have been discussing, and this trend we see really now taking off. For all those industries, competition is so tough, so you cannot be average anymore. You must be specialized. And what we see, and maybe you will ask yourself, how many of those guys are buying trucks? Not that many, but they are controlling huge logistical systems. And therefore, we must be part of the discussions when they are designing a new pulp mill, or a new warehouse, or a new cross-dock, and to understand what are the demands from them to our direct customers, the transporters. But also, what demands do they have from the consumers, from the politicians? What are their aspirations to build the brand? And often we see that if you go into internet, it's a gold source, as you know, it's a gold mine. And you can just see the business plan, actually, for us. I'll come back to it. But what does this give as a logic for us? We cannot just say, okay, we are working with trucks, we're working with buses. We need to have an application and segment focus that comes into the sales process, that it comes into the service process, that it comes into the setup of the whole organization. One example here, just to illustrate it, you can say that this is how we work on it. We are going from being supplier to customer into a system view. Buyer of transport of services could be Scania, could be IKEA, could be Carrefour, could be Vale or Rio Tinto. Transport companies are our direct customers, but they are operating in a solution provider relation and more integrated with the big final logistical buyers that are designing and mastering the logistical process. And Scania then as the provider of transport solutions, both when it comes to hardware and services. In one case, we actually detected that we are part of this triangle in all corners. And we said, what can we do if we work in this triangle beyond contracts and really are applying a lean philosophy as we have done in our production system the last 20 years and take out the waste? Because you know, when you do a negotiation of 1 or 2%, it's fun, but I mean, in the long run, it will not gain any improvements out of it. It will just be, you know, an endless discussion of contracts, etc. So we said, how do we improve this for real? How do we create a common vision and say, this is what we want to achieve? And Scania, that corner, you know, transport solution provider that we are. Transport company, we have a small, tiny transport company, important though for us, 25 trucks. We are doing inter-plant transports and also some inbound transports to Scania. Both with Scania trucks, the majority, but also with some competitor trucks, of course, to see what is happening. And then we are buying the transports, of course, because they are transporting for Scania. So we are in this circle. But as in all big companies, there is always a trend that they are a little bit functional also, so communication is not always obvious. So we said, let's really work together in this flow now. What has happened? You know that we have a vision of halving the transport sector's CO2 from 2000 to 2020. When we started to work in this triangle, for real, we halved the CO2 in 4 years with existing technology. And this, ladies and gentlemen, is what it's all about. How do you go from a functional world between different juridical units to a flow world where we are working together and taking out the real waste? There we will be together the winners. It will be so much to gain. You can see here, what is it we are talking about? We are talking about, for a typical company that having, and I will come back to it later on here, it's 7,000-8,000 euros per year. And then you have the CO2 issues that the customers are ready to pay for, because they want also to achieve what they have promised when it comes to sustainability. So there are a lot of good money on the table to work together here. Holistic perspective, I'm coming back to it again. And I think this is a very good example of it. The base for it is the connected vehicles. Everyone is talking about connected vehicles, that's the future, etc., etc. It is here and now, I can tell you. From 2011 to now 2013, we have more than 40,000 connected vehicles. Almost all vehicles leaving our production lines today in Europe are connected, meaning that we have every 5th minute a download to use the data, mainly for our customers directly, of course. We are both providing information and also for different performance steps, selling monthly subscriptions, but also to use the data for us to work with different types of services in the income statement for the customer. Driver coaching, financing, insurance, etc. It's here and now. I know that a lot of you are interested also, how can we do this also from a business intelligence? Because this is one step ahead the normal indicators that you are taking, because here we can isolate different industries and see what is happening when it comes to utilization rate, and that will be, I can tell you, candy. Very interesting. But that we come back to later. Maybe we'll just a small price tag. Okay. One very good example is Ecolution by Scania. We discussed that and it's starting to take off now. If you take Ecolution, that is the same thinking as we have discussed with our transport lab. And Ecolution is about, we start together with the customer, we put everything on table and say, what is the current status now in the transport flow here? And you see the starting point in this case is a Spanish customer working for, I know that they're working for the automotive industry, for different OEMs and also for different sub-suppliers. They started with 32.5 liter per 100 kilometer in their fleet, 10 vehicles. And we set up a common target. Not a contractual target. We say we can achieve this if we work together. We started with the vehicle. Still, there are a lot to do to really discuss around the modular system, what you can do when it comes to the CO2 specifics. That gave something. We worked with the driver training initially and also repeatedly. We worked with the coaching that we're using the connectivity and actually once a week have a small coaching talk with drivers and our driver coaches. And we are doing the Maintenance Plus. That is an extra maintenance feature to always keep the vehicle in the new shape when it comes to air drag, aerodynamics, engine performance, etc. And we are coming down to 27.3. And just think about it. When you work like this, you will not stop with 30.2 and say, okay, I've fulfilled my part of the contract. You want to achieve something more together. And that is the secret. And it's only 85,000 euros per year. Just think of that the capital cost of the truck is 1/3 of the fuel cost. So I mean, if you are gaining 60% here, actually that is offsetting 45% price increase on the truck. I think it will be tough, but nevertheless. Okay, and the sustainability journey, to take the lead in the CO2 journey here and now, because often we are focused, okay, the new technology, of course we're working on that. Hybridization, electrification, what shall we do, longer vehicles. But what can we do now with existing technology? We have invested billions, and we need to get that out in the flow thinking. Ecolution results so far. This is also changing the sales model. You're moving into a dialogue. And the dialogue is the important part of setting the trust and setting the goal. We launched it in 2011, and it was pretty flat. It was very flat. We didn't succeed to really gain a lot of contracts to start with. But that is also the part of the mindset journey. It takes some time, of course. How do we treat that? Do we have the right tools? Have we trained? Have we have the confidence to deliver on it? We have never set a target before. What will the customer say, etc. Openness, transparency, and then try to deliver on some pilots. In last year, it took off. mainly with pull and some positive push also from our side, you can say. But you will come back to that, Henrik. Significant fuel saving average, we are above 10%. 18 markets now are ready. We have a certification process because this is very important that you have the organization ready to provide also a target setting, and that will continue. And already now 10% of the sales in the certified markets are Ecolution by Scania. This is the solution provided journey we're into now. Scania production system I come now, and why? Because I said we will grow, and you understand why now. I mean, that case is clear. So how can we achieve that with a good leverage in the system also? Since mid-90s, we have been working with Toyota, and after that, gradually working ourselves. The first 5 years when our lean thinking was continuous change, not continuous improvements, and then we started to see the flow. We started to get people involved, we started to apply a new model of leadership, and we started to get the results out from our system when it comes to productivity, but even more important when it comes to quality, when it comes to motivation, when it comes to health attendance, and all the parameters are pointing in the same direction. And we are now at this level, and this journey will of course continue. We are investing in existing structure. Lately now we have announced from the technical capacity we have from 100,000 vehicles up to 120,000 vehicles. We are doing in mainly the European machining and manufacturing structure. Then we will have a good leverage, 1 to 4, 20% increase in capacity and only 5% of increase in the replacement value of our production. We are complementing that with regional product centers. So we can have a diversification of the product range out in the markets with shorter lead times, as you see here in South Africa, Middle East, Russia, Far East, Southeast Asia, etc. It is a very important tool for us, and it's possible because we have one global product system, the modular system. And thereby we can supply from the two main bases we have of machining in Sao Paulo or in Latin America and in Europe. We continue this journey also into the network. The biggest production organization we have today is our network, the production of uptime and services over the life cycle for the customers. Christian will talk about it. We call that the Scania retail system that is also based on the same lean and leadership philosophies. And I will not go into it because you are one of the most dedicated persons I know regarding this. But what we see is it's not only giving cost and productivity benefits. It gives motivation, it gives shorter lead times to the customers, it gives better capacity utilization and better customer satisfaction. Fantastic. I mean, it's magic, but you need to be consistent and you need to have patience, and this is I think the majority of the leadership time we must spend here. Also in R&D, research and development, we are working in the same phase here. We are applying our lean thinking. We call that the R&D factory principles, research and development. Shorten lead times, quicker time to market. We have seen results already. We were out early with Euro 6 applications that have given us a good availability of Euro 6 solutions in different markets. That is partly the explanation of the market share gain, Henrik, lately. And also that we need, because you see also our part of R&D of the total turnover of Scania. And we need also to balance, so we have an affordable level in the long run of R&D cost, and at the same time will not sacrifice when it comes to different performance steps and also geographical challenges we have when it comes to develop our product structure. I will also come into this subject because I think we have a lot of challenges when it comes to research and development. We are defining it not only for the product but also for the services, what is core, what is strategic and what is non-strategic. And one opportunity that we have seen and that we have communicated is also to further strengthen this product portfolio, but also some cost benefits into the non-strategic areas, or of course the cooperation with the Volkswagen Group. And in this respect, also as we have said, we are cooperating with MAN, where we are examining a number of areas such as axles, gearboxes, purchasing of standard components, as well as components and systems related to future hybridization and hybrid technology. What we see in those pre-studies that there are possible areas of synergies that is clear, and that those work is progressing according to our internal plans. I would also like to say that in addition to those areas, we are also conducting benchmarking and experience exchange in a number of other areas that we believe is important, such as IT, production methods, because that will, as we examine it, be beneficial to get different views on it. And in addition, of course, in the longer to mid-term, with the extensive research capabilities that we see from the Volkswagen Group, there are other, what we see, technology areas coming up for the future that could be beneficial to explore for Scania in our applications, not at least when it comes to the technology areas as such. And however, and I think this is also a discussion that has been ongoing before any decision is taken for an individual project, and here I will be a little bit more formal just to be clear to all of you. It must be clear that the identified synergies are equally distributed to all shareholders of Scania, of course. And Scania has, since 2008, a clear policy from the board of directors and management, and I will show that has implemented an internal process to safeguard that the evaluation of clear and beneficial business cases for Scania is treated also in relation to the principles of arm's length distance. And the process is as follows. On the right side, you see what we almost must, of course, examine is the corporate benefit for Scania. We are the Scania management, we are the Scania employees, and the corporate benefit for Scania is explored with the arm's length principle that we are working with all our partners when it comes to discussions, meaning that we are treating all partners equally on a third-party basis. We are examining the strategic fit for Scania, both when it comes to strategic enhancing competitive position, but also the risk of strategic loss, meaning if it could erode a competitive position. That is part of the corporate assessment, corporate benefit assessment. And then, of course, also important to mention, is often forgotten, we are doing for all projects and initiatives also prioritization on its own merits when it comes to an initiative, resources, investments in relation to other initiatives within the Scania Group. Given that we see that in the feasibility pre-study, we do a more deep business case. And then if we see also that this is beneficial, we do an execution and follow up. If you just see that process, you can also see the decision process on the right, on the left side here. After a first pre-study and idea, it is reported, and all initiatives are reported to executive board through a liaison office that is under the direct command of me as president and CEO of Scania. Any approval for execution are to be based on, as I said, an individual business case. The approval then, after the business case is conducted, is made first by Scania Executive Board and then by the boards of directors. The detailed logging of initiatives, but also in the phases of ideas or requests, is to secure a relevant internal as well as external traceability and also audit trail. The work of the board of directors related to this area will be described in the annual report of for 2013. And in addition, Scania will, at the annual general meeting 2014, give a clear and concise summary of the processes that have been put in place, how decisions regarding corporations projects are made, how transactions between Scania and the Volkswagen Group are monitored, as I said, and documented to make them auditable. And the assignment also given to Scania's auditors to pay special attention to the processes implemented by Scania, as well, of course, as the compliance with those processes. Scania's external auditors have also said that they will, at the AGM 2014, comment on their review of the processes and the decisions taken by Scania in connection to the cooperation. In relation to this, I would also like to stress that we, as managers and top management of Scania, is paying a lot of attention also to work with our people in this matter. And this is a very important leadership matter, that people are feeling secure of not only doing the right things, but also doing the things right. And for that also we have a clear escalation process, both via the normal line organization through management, but also anonymously, if you like, if you feel that you're not sure if we are doing things how it should be done, I'm not sure if I can act like this. Of course, it must be possible to discuss, and that is not only for this area, it goes about trade regulations, it goes about working environment, that you always should have a possible way to communicate. Scania is a company with dedicated people, and we are a company that are working every day in a global competitive position with a long and proud history. Of course, this will continue. We also have, as I said, a leadership tradition of, as we call it, loving the deviations. The best way to correct things is to see that we are moving ahead. That has been the base for our quality work. And why I say that is that we have not a culture of punishment. Deming, who was a quality professor in the US, once said, if you have fear, you will never have the right figures. That is good. And that is the leadership culture we have at Scania. When it comes to the current market development, we have had a good trend in Europe. And that trend, and we have not seen the seasonal weakness coming into Q3. But the strong trend we have said in Q2 has continued also during the summer months here. Of course, one very important factor is the pre-buy of Euro 5, even if it came pretty late here. But there are also other factors, such as I said, the replacement need, feeling of stability, even if it's shaky still in Europe, but then with the replacement need, the Euro 6 availability that Scania has in relation to competition, and also the fact that we have gained a higher market share. For Latin America, after some consecutive quarters with very high order intakes, we have had an order backlog that has increased, and also some sort of lack of visibility of how will the incentives look like after Q1. We have seen some softening during the summer, but one should put that also in the perspective of the order backlog as well as the visibility, and also the extreme high demand that we have had. The reason also for our high demand is not only related to the incentive system, it's also related to a considerable gain in market share over the last year, thanks to entry in the lighter segments, in this case for Scania, the heavy distribution, as well as the very successful entry of the Euro 5 applications from Euro 3. In other regions such as Asia, Eurasia, we see summer continuing on a stable level. We have still a very uncertain situation in Middle East, as you know, even if we have seen some positive highlights from Turkey and Israel. South Africa as well, while mentioning also for Scania, is continuing on a good level. So overall, this is a little bit on the truck side. Buses still weak in Europe due to lack of public spending capacity in the city bus sector. But in other market regions, we have absolutely an okay level, and we are gaining ground for the bigger city bus solutions. And also on engines, you can see that we are on an okay level, and we expect some sort of pre-buy up front the 1st of January 2014 before the T4 final, from T4 interim to T4 final will come into play here. So I think with that, I will end the introduction. A little bit, some minutes longer, Henrik, than expected maybe. And I think I will leave the word to you, Erik. Thank you.
Thank you, Martin. Just to remind you, we will have a question and answer session after all 4 presentations today. Time now to dig deeper into the commercial system of Scania. Time for Henrik Henriksson, Head of Sales and Marketing, to enter the stage and explain how we will reach the 120,000 trucks in 2020. Please.
Yes. Thank you, Eric. Good morning, everyone. My responsibility as head of sales and marketing means that I have 5 business areas. These 5 business areas, they are responsible for either a product portfolio or a services portfolio. And what we are doing, we are sitting on a P&L responsibility, and we are selling these products and services to our distributors out in the world. And it doesn't matter if we control them ourselves or if they are private, we work as customer supplier in that relationship. The 5 business areas are trucks, buses and coaches, and engines. Those are sort of the equipment business areas. And then we have parts and services. Here we have lately added more resources and focus into this business area to be able to cope with the higher ambitions that we have when it comes to increasing our proportion of the service sales, from 20 to 25% of our top line to 25 to 30. We will mainly do that by working with service products that we will launch globally, global initiatives that we call it, and they will be rolled out just like we are rolling out our products, which means that we're moving away a little bit that each individual market can create sort of a portfolio of their own services. There will be global initiatives being rolled out. The 5th business area is brand new, and it's about connectivity. Martin mentioned how we were collecting information from the vehicles. That data about how the vehicle and the drivers are performing, we then cross-pollinate, or we add that together in a mine where we data mine it from other systems of the company. And that way we can start to predict when components will break, when it's time for new services to happen, and we will create new types of services, both for our customer's customer, for our customers, and of course also internally to improve our efficiency in the sales and service process. Improve planning, for example. My presentation, I will focus very much on the journey towards 2020 and how we will make this happen. And it's about the 120,000 trucks, it's about the 15,000 buses, and the 20,000 engines. The service growth, Christian, my colleague, will come into more in detail. This scenario to 2020 is building, of course, on some sort of recovery in Europe, and also a certain GDP development in our emerging markets. That's the base and foundation for it. But regardless in which market in the world we are, our aim is to make our customers more profitable. And we will only work with a heavy segment above 16 tons, and we will base it on one global modular system. I've chosen to highlight 4 out of a bigger array of pillars that we are building our sales and marketing strategy on. And since 2006, we have been working with what we call customer application strategy. We started that time to break down, and if I use the truck business area as an example, break down, instead of just looking at geography, we started looking at different segments, and we had 4 segments at that time. Now we have continued the journey using the magnifying glass, going even more into the details, and now we have 17 global applications. Why are we doing this? We're doing this to understand the customer needs better. And that might sound like a cliche. Isn't everyone talking about this? The difficulty here is to actually go in and understand in detail the customer's operation, to understand the customer's income statement. What is driving cost? What is the cost per kilometer for this kind of application? But also the income side. What is the revenue model for this customer? How are they getting paid? What is the revenue model of the customer's customer? And if we break this down, we get a better understanding. Then we will understand how the customer is making money. Number 2 here, long-term view. We have had a tradition at Scania, and I think many of our colleagues in the industry as well, that you focus on the first owner. And they own the truck or the bus or the engine, usually just for a couple of years. We need to put much more attention to the second and the third owner. And Christian will come back to this more in detail, but I want to highlight that we can already from day one start creating products and services that will enhance our market share, I would call it, in especially services from year 4 to year 10. But also this means that we need to start looking used vehicles as a core business. Today in certain regions like Europe we have almost a 1-to-1 ratio. When we sell a new, we get a used vehicle back. We need to master that kind of business. Thirdly, emerging markets. We have to take a position, you heard from Martin. We have done that in Brazil, we were in there in the 50s. We have done that in Russia, we came in very early, and that is paying off. We need to do the same journey now in China, and eventually also in India. Number 4, market share, the rolling fleet. We are living out of the rolling fleet that we have it. We are gaining most of our profitability on the service side. So to make sure that we pump in new blood into the rolling fleet and that we maintain that is core. And here we need to follow the market share development more than we have done in the past. We have to make sure that we break it down into these different applications. It's not just enough to talk about the market share in Europe of 14.5%. What does that mean in detail? How are we performing in different applications in different regions? This is a little bit of a mindset change for us in this company, but we already see the last 12 months actually that this shift is paying off in better focus on this. We are taking market share in all regions all over the world. But coming back to the customer application strategy, I would like to spend a little bit more time on that. This is basically describing a kind of system we're using where we have on one axle, we have the different industries we're working into, and then you have different kinds of vehicle specifications. And to give you an example here, one industry is retail. A typical customer in this industry is Carrefour, it's ICA, could be Marks and Spencer's, could be IKEA. How are they acting towards our customers? Yeah, first of all, they don't own much of their fleet themselves. They usually outsource most of their transport. That means for our customers that they have quite a strong competition. The type of vehicles that you're using in this industry is fairly standardized products. Means that it's a commodity, which of course puts pressure on us that when it comes to profitability when selling vehicles here, it's not that great. These customers are not running that many kilometers either. They may be running around 80 to 100,000 kilometers per year. So our service revenue in this industry is not the greatest. How do you become successful here? Yeah, one is to work with keeping up a good high residual value. That is important for these kind of customers because there's a big bulk of used vehicles coming back, and that is of course setting the cost for the finance over the first 5 years and affecting sort of what the cost per kilometer will be. Another example, completely different, is mining. Our customer in this industry are big global mining houses, basically 20 of them in the world. Very powerful. Here we are competing against yellow machinery, which is big Komatsu and Caterpillar trucks, 3 times the size of our vehicles. Here we are competing on flexibility and uptime. That means that the customer here, they are sometimes actually owning the vehicle themselves and sometimes they outsource. But whatever the case is, they require uptime and availability of this equipment. They are running 24/7, 365 days, and the production cannot stop. So of course that means that when we are competing with yellow machinery, the price tag of the vehicle is not that important. Good for us, but more important, they require a lot of services. And it doesn't really matter for the operational manager in a mine what the cost is, because it's peanuts compared to having the mine go down, which means that the revenue and the profitability on the service side is very good here. Here the trick is to be able to grow together with the customers, go out on their site and build up service capabilities where they are operating. A third one example when it comes to application strategy is then building and construction. Here is a segment where there is small operators, usually only owning 1 or 2 trucks. They are working on individual sort of missions and assignments to a broad range of customers. So our customers are not really visible. Here, the equipment behind or on the truck is usually more important than the truck carrying it, which means that here we need to work closely with the bodybuilders. They are a stakeholder here. Specialized vehicles, which means that the margins are good here for us, but the mileage is fairly low, which means that service revenue is lower. So success here is very much about coming in and working close with the bodybuilders and really utilizing, in our case, our fantastic modular system to tailor-make a solution of the vehicle. Another example of this application strategy could be airport services and so on. Here we have, on the truck side, 17 applications. And what I'm trying to describe to you is that the deep dives that we have done into these different applications has built up an enormous knowledge and experience base, so that when we sit down and talk to our customers, we understand their business and we can tailor-make the solutions to them. But we also know when we're going into the business, what are the risks and what are the rewards here. And based on that, we can steer our initiatives to make sure that we grow with profitability. Because that is also important when it comes to the journey to 2020. It's not only about growing, it's about growing also with profitability. To take one application as an example, here we have the construction globally, and you can see then quite a big step from 2012 to 2020. This has a little bit to do that the history within Scania, we have been what is called a long haulage, long distance kind of focus company. But we tried to start changing that 6 years ago, and that means that we are now starting to get products that will be very feasible in these kind of applications. And here we have, of course, a roadmap on our R&D side that goes hand in hand to make sure that we get products and performance steps along the line so that we are being able to sort of add more functionality to the customer. But it's very much here about breaking this down into even more details, country by country, applying plans, following it up, and then train the people, and then train the people, and then train the people again. Leaving then the application focus as one of the pillars that we wanted to go into more in detail, just to show that the journey that we started already 6 years ago is the foundation for sort of the growth that we are now launching. And going in and looking at the different regions of the world. And here going down a little bit more into detail what's going to happen here to make the journey to 2020 real. Here you can see that Europe in 2020, on the truck side here, we'll come back to buses and engines later, Europe is still the main market. The main growth, the development will come in Asia and in Eurasia. But you can also see that in Latin America, that is our second home market. It is very important for us both when it comes to volume, but also from a profitability point of view. Starting with Europe then, here we see that this is not a mature market. Europe has not stopped growing. There's not a stagnation. It will continue. We see that over time we are lifting both the floor and the roof. And it's cyclic, as you can see, going up and down. Here the curve stops at 2012. And we are, of course, expecting that there will be a recovery in Europe, sooner or later. In Europe as well, we have a target, if you compare it to the previous peak, and that date will vary. You will see that in this case in Europe it was 2007, we had our highest performance. Not that big difference compared to 2020, so where are our ambitions? Yeah, here it is about trying to extend our focus from long haulage to different kinds of new segments, using the application strategy that I talked about before. Another way of sort of safeguarding that we will be on this level at 2020 is to introduce rental concepts. Rental is becoming more and more in demand from our customers. They want to have flexible solution. By rental, we mean that they want to have a truck only for 1 or 2 days, up to 2 years, but short contracts. We also need to make sure that we are well positioned in the eastern part of Europe, where we have had a history of going in early. Poland today is the 4th biggest market in Europe. Poland has taken over the role that the Netherlands had before as sort of the transport gurus of Europe, being everywhere. That is now taken over by Poland. Poland is one of the fastest growing markets. And there, of course, we are well positioned since before. We have a market share of close to 20%. We need to be in Germany and France, where we have a tradition of being below 10%. We have now, the last year, started to climb over that threshold, and we will continue that journey with the dedicated work that has been going on for the last 2 years. 45,000 trucks in 2020, that is based roughly on a market share of 15%, and a total market of 300,000. And today, as we speak, or the first 6 months, we had a market share in Europe, 28, of roughly around 14.4%. So is this realistic? Yes, it is. What will help us also, and here I would like just to take one step aside and highlight the new products that we have launched on the truck side, the Scania Streamline. You will hear more about it later on from my colleagues. But this is a product launch that is strengthening further our leadership when it comes to fuel efficiency. We are number 1 in fuel efficiency, and that is a key for us moving forward. And this product is delivering improvements of 6 to 8% in fuel efficiency compared to the previous model. And then we were already in the lead. We have also, with this product, established a broad range of specification and applications that we can meet with Euro 6, which is a competitive advantage where we are ahead of our competitors. We started 2 years ago with Euro 6, and we have now implemented it in all the 17 applications I was through before, which means that compared to some of our fellow colleagues, we don't have to go just into one segment. We can go broad. And that will not pay off only now, it will pay off in 2014 and 2015 as well. Because the customers buying now, they get trust in our products, and they will come back to us. I said 6 to 8% market, 6 to 8% fuel efficiency here. And here I just want to highlight what that means for our customers. This is 2 typical examples of the operating cost, a long haulage operator in Europe, and then a mining contract in Indonesia. And you can see, of course, that it varies. There you see the potential of our earnings in the mining because of the spendings in repair and services. But looking at then the Western European long haulage, which will be a target group for the Streamline, you see that 35% of their spendings is on fuel. So obviously, if we could deliver a 6% improvement, that means roughly 2% improvements on bottom line. And today, ladies and gentlemen, the profitability for our transporters in Europe, a good transporter, they are earning 2% EBIT. So that would mean a doubling for them. And if we would add then the concepts of ecolution that we're rolling out, where we have an average of 12%, that would be an additional 2% EBIT improvement. And then you see the effect that this kind of products and services have for us in the market. And this we are delivering also with Euro 5 and also with Euro 6 that is coming now. And mentioned before, if I said 14.4% market share, I would estimate that roughly that is 1.3% improvement compared to last year in Europe. And around 0.8, 0.9% of that improvement comes alone from that we were early out with Euro 6. And that means, of course, that we are taking that market share with a very good price premium on the Euro 6. So that is a good way of growing. Right, Jan? Leaving Europe, then going into Eurasia. Here we have then a development that's going to be quite dramatic, up to 16,000 trucks in the next, at the 2020. Here, of course, we see this development coming already. In the early 1990s, there were just a few hundred of our trucks sold in the market. Today, the Western European makes, they represent, of the total market in Russia, they represent some 40%. And that was more or less nothing 10, 15 years ago. And if you look at the more European part of Russia, where we have built the service network, in St. Petersburg, that is 58%. In Moscow, it's around 50%. And as we are expanding our service network further east, we will see the same trend, because that is what's holding back the development in the rest of the country. So here, we are regarding Russia as a home market. That is just like Scandinavia. It's same kind of customer operation conditions. That is a home market. We should have the same sort of position as we have in Scandinavia, in Russia, going forward. And here, if we maintain our position with 25% market share, this will come. It's not only about the long haulage distance here, it's about construction, timber, agriculture as well, those kind of applications. And we see the same structure happening in the neighboring countries. Moving over to Latin America. Here we have had a strong growth in recent years, driven mainly by Brazil and Argentina. We have made some specific moves into lighter segments in semi-distribution, which has given us a boost in market share. Here we are around 16% market share in Latin America, and that is quite a dramatic increase compared to previous years. And we are building that on moving into new segments and new applications. So here, this strategy is really paying off. Examples is sugarcane, mining, forestry, and then lighter distribution. Here we will also have a launch of the Streamline during this autumn, where we will have a similar development on the fuel efficiency improvements. And that, of course, will be the foundation for the growth taking up the coming 2 years in that region. We are, if you look at the first 6 months, we are more or less on the pace of 26,000. So is this realistic? Yes, it is. It's not only about Brazil and Argentina, though. We are also growing in the smaller countries. Colombia is one good example. But also there are other countries where we are growing together with Brazilian customers, moving into the region, but also other big multinational or sometimes local players. But here we are making sure that we are growing the service business just as much as we are growing the vehicle sales. Asia. Looking back, I would say that here the customer maturity has not really been, if you generalize, in Europe. But our time is starting now, and we see it clearly. We see that the demands from our customers and the consolidation in different industries, hazardous goods is one of them, for example, is immediately forcing a development of going for more sort of sophisticated equipment and service solutions. We will see the same trend as we've seen in Brazil, and as I described in Russia, we will see that coming in China. The total market in China today for heavy vehicles is 600,000, sorry. And the proportion that we will be able to target here will, by 2020, probably grow to 15% of the total market. And that will be more than sufficient enough for us, with the market share we have today in China, in this specific segment, to build a service network and to take the position for the future. Because the sophisticated part of the market by 2030 will be the vast majority. India will go a little bit slower. There we have some other issues. We see that development lagging behind China maybe 10, even 15 years. We see also in this region that there is good potential for us even further improving our position in mining. There's lots of mining, especially coal mining, but also other kinds of minerals. with the demand, of course, of China, especially as the engine in the region. New segments in Malaysia, Indonesia, Vietnam, that there we're going into more kind of sophisticated long haulage solutions, targeting retail customers, among other things. Middle East is included here in Asia, and there, of course, we have a political instability now in the region, but historically, and also today, we have a very strong position in these countries. Iran, Iraq, that is also home markets for Scania. And there we're just waiting for a stability, then we are geared with a very strong service network and very strong partners. And there we can see extreme comebacks where we will see peaks in volume that we really need to be prepared for. And that's why we already have invested in the service network, so then it's more about production capacity. Turkey, another important market, the same size, more or less, in the heavy side as France or UK, cannot be neglected. There we are on our way on a journey towards 10% market share to start with. Africa, Oceania then, and if we start with Australia, New Zealand, here we are really using the application strategy. We're going into different kinds of applications, agriculture, milk transport, mining, and also retail here is very important. We are taking market share both in Australia and New Zealand, and that will be the majority of the growth here will not come from the underlying growth of the market, but more that we are moving up our positions. In Africa, we have historically a very strong position in East and in South. That is Scania territory. There we are dominating completely. We are strong in the cross-border transports. And there's a lot of trade between these countries, and they need someone that they can rely on, and we have a service network in this region. The same goes for Northern Africa, but there currently we have, of course, certain instabilities as well. But we have a good foothold in those countries. Where we are weak is Western Africa, and that we are addressing now, where we need to build a bridgehead into that region and start building up our presence. That is also very important as a future market for our used vehicles, to roll them down into Africa. Here we have to follow the GDP growth, and just one example here is South Africa, how you can see that with the growth in GDP per capita, our sales is following. There is a strong correlation between this, and this we will see in other parts of Africa. So here, once again, is this realistic to reach these targets of 7,000? Yes, it is. So leaving the trucks then, and moving over to the bus and coach. Here we have a potential of 15,000 by 2020, and here we are expecting a rebound coming in Europe. The total market here is around 20,000 at the moment. It needs to come back to 30,000 where it's been historically. Our part of that is 10%. There we have been in the past as well. Eurasia, 700 units. Yeah, that is basically what we're delivering this year with a big order to the Sochi Olympics. However, we need to be able to maintain this over the years, and here we need to work with local bus builders where we are supplying components or chassis. Asia, here we have sophisticated customers. This is different compared to the truck side. In this part of the world, also including Europe and the US, we have the world's most sophisticated transport companies on the bus side. In Hong Kong, Singapore, Jakarta, and parts of China. They are putting high demands on us, and they require our type of equipment. So here we have a good foothold. We just need to grow with these customers. Africa, Oceania, we are here. As in other parts of Asia, bus business is sometimes more important for us than trucks. They are building the brand, and they are the products we're going into the markets with first. In Africa and Oceania, we have more or less this volume already today. In Australia, we have a history around 25% market share on buses. And Latin America, here the 4,800 will be a move upwards. We haven't been on this level before. Here we are launching now new products that will give us the possibility to go into the city bus segment where we haven't really been targeting. We have been into the so-called BRT system that I'm coming back to here now. But with new products, we will be able to go into also normal types of city bus operation. And that will give us that leverage to grow to 4,800. Bus systems, these are growing all over the world. Its origins comes from Latin America, but they're now spreading fast into different kinds of regions in the world. And why? Yeah, because with the urbanization we have, cities are growing very fast. And this is more or less the only way to keep up with the growth of a city and building a proper infrastructure system. This is basically a subway overground on rubber. And it's quicker to implement than building a tramway or a subway system. It's more cost efficient. And it provides the same kind of flexibility and mobility as all other kinds of transport system. This politicians all over the world is starting to understand now. And people in the society, they're starting to see that this is a very efficient system to transport people. Finally, a few words about engines business. Here, we are currently at around 6,000-7,000 units. So here we will triple the volume. Is that realistic? Yes, it is, because we know now what we have in our global portfolio of customers. A few years ago, we started targeting big OEM manufacturers in construction equipment like Terex or Doosan, which we haven't been touching before. And they are appreciating what we are delivering. They are appreciating our fuel efficiency and uptime that we have from our trucks and buses. And there was a transition of emission levels lately, where we came in at the right time, early, with the right type of products as a spin-off of the Euro 6. And that gave us a good foothold into a number of big global OEMs. And that means that the 20,000 is more or less already in the pockets. It's all about sort of implementing and starting to apply to these new emissions levels, and then the volume will come. So, to summarize, there will be opportunities in our industry long term, both for trucks, buses, and engines. And we know exactly how to capture those opportunities and when to do it. And the growth objectives that we have put up, we will deliver on them. We will deliver the volumes for 2020, and we will do it with profitability. And why is that? Because we understand our customers' needs. Okay, that's it.
Thank you, Henrik. After the break, we will concentrate on sales of services and our services. We will listen to Christian Levin, who is head of our commercial operations. We will meet here again at 10:15.
Ladies and gentlemen, good morning. Also from my side, Christian Levin. I am responsible to manage our commercial operations around the world. That is our organization of workshops, dealers, and wholesale organizations, or simply put, where Scania meet with our customers. We are today present in most corners of the world. As you can see on this map, we have 1,543 dealerships and workshops, where of 511 are in our own possession. We have 17,000 direct employees in this system, and another at least 15,000 working in the private part of the network. But is that really important, captive or private? Well, Jan will elaborate more on that later, but I would put it like this: no, not really. What is important is, from our side, is that we treat everyone equal and everyone is equally important. What is important, though, is that we have a very consistent customer satisfaction and quality throughout the network. And of course, when we go into a new market, we like to do that with private partners. Our balance sheet would not stand building up a complete network in China, for instance, or in India. So we go in with private partners, and the strategy then is to have at least one captive dealership. That is very good, because then we have a grip on the price level in the market. We benchmark with the private part of the network. And finally, we are fronting the customers ourselves. So we know what kind of capabilities are needed in that particular market to be successful. We are in the make or break moment. That is crucial for Scania. Those of you who have been with us for a while recognize lots of new blue dots here on the North American continent. That is our newly built up network of some around 150 dealers, workshops mainly, where we can take care of the OEM or our customers for industrial and to some extent marine engines. So that is somewhat new to us. Right, repeating our objectives, and my part of this presentation will then be to address how this ambitious service growth, taking us from some 2025 to 25-30. I would love to be more specific, but you know that the cyclical market we are in is extreme. The fluctuations on the new vehicle sales are extreme. That is not at all the case for the service business. That is of its nature rather flat, since we're working with the installed base. All right, let's have a look at where this growth is going to come from. Well, in the scenario Henrik presented with 120,000 vehicles sold by 2020, we will of course substantially increase the rolling park. We will increase the rolling park with more than 50%. That will be one path of the growth. But this will also put a lot of requirement on us to get closer to customer, to build a network where we are in some way, and I will come back to how we can do that in a different way, but in some way we have to get close to customers or even closer to customers where we are today, because downtime is more and more an issue to our customers. They cannot travel long distances to come to our workshops. We have to develop new products, new services products that will attract customers. If you put this a bit into relationship and figures, we invoice today 17 billion Swedish krona in services products out of the group. And we will have a negative impact, if you can talk of negative when it comes to quality. But we think that the improvements we do on our trucks and buses will actually bring down the need for repair and maintenance. So that we will have to compensate. That will be compensated by the growth in the rolling population, but it will also have to be compensated then by higher market share, simply put, on what is already installed in the market. One important part of that will be expanding our services from the traditional Scania chassis to what is built onto the chassis. So whether it's a bus or a truck, there is always something built onto it. If it's a truck tractor, there is a trailer behind it. And there is at least a 1-to-1 ratio. In most companies, there is more than one trailer behind a tractor. There is a business to capture for us. The drivers behind, if we start from the customer side, our customers are developing. They are developing into more than being transporters. They are becoming an integrated part of the logistics chain. They become logistics providers. They move forward in the value chain. They start to offer services to their customers, such as warehousing, such as picking and packing, such as labeling, and they get, in the same time, less and less interested in running their own workshop. That is not core business for a modern transporter of today. And hence, a great possibility for us to go down the value chain from our position and take that over and run it in some way, and I will come back to how, for our customers. Demands on total cost of operation is crucial for our customers, so is uptime. You heard, for instance, about Ecolution. That is one way that we are addressing this, thanks to our connectivity. Henrik mentioned 2% EBIT. Then you are a good transporter if you manage to squeeze that out of your operation. If you transform that into working days, if you think of a normal transporter perhaps working 250 days, that would mean that this whole profit is generated in the 5 last days of the year. 5 days, you make your profit. Imagine what 1 extra day of uptime means, or imagine what 5 days in the workshop means. So for instance, it will be logical for the transporters not spend 1 day in the workshop maintaining the truck and another 1 day maintaining the trailer. This will have to be done in the same time. The growing park we have already addressed. There will be an increased complexity in the vehicle. This is happening as we speak. Much more computer softwares in the truck. We see Euro 6 new emission levels. That is also coming gradually over the globe. There is alternative fuel coming. All of this put together means that it is much more difficult today to maintain and repair a Scania vehicle. So there will be a logical movement from the customer workshops into the OEM workshops, because there are simply not the skills available to everyone to do this kind of work. So, success factors. Well, we have to get closer to customers. We have to have a competitive services portfolio. We have to develop partnerships with customers, like we talked about in Ecolution. We have to increase quality in the repair maintenance job we do, and we have to shorten lead times on the interventions we do to improve uptime for our customers. I will take it from headlines now and go a little bit into detail of each of those areas. If we start then from the customer end and getting close to customer, I say, well, of course, there is the traditional way to build a network of workshops in a market. And that, of course, we have to continue to do. That is the backbone of our operations. And we have to do that in emerging markets. We have to do that in China, India, to some extent in Russia, and we have to do that rather quickly. But also in our traditional mature market, we have to not grow, but we have to adapt our network. We are finding ourselves in a situation where many of our workshops are in inner cities, for instance, in the growing European cities, where trucks cannot even enter. So we have to move workshops. We're finding ourselves in a situation where the customer base, for instance, is moving out of the Benelux countries into Poland and Eastern Europe, meaning that we have to downsize in Benelux and we have to increase our network in Eastern Europe. So that is what we have to address on the traditional network. But we can do so much more. Scania Assistance, 24/7 operation, helping customers having a problem reactively on the road. This is one of our hidden assets. It's really unique selling point. We have the best functioning global assistance systems in this industry. But I will come back to how this can develop. Mobile workshops. Well, I mentioned it's not customers' core business anymore to run workshops. Well, what happens is that we are touring around with service vans and mechanics on a regular schedule to our customers to do the maintenance in their premises. So they have the advantage of still being close to base, but they have our competence. Or as a next step, run the customer workshop ourselves. Actually happens more and more that the customer after a while then says, well, why don't you run this for us? And then we can do that in two ways. Either just as a captive operation for that specific customer, or open up Scania Service Point and say this is available for anyone in this area. Field workshop, the next performance step. This is mainly used for remote locations. It's usually a container-based workshop where we go into either an installation for a long time, like in a mining operation, or in a process industry situated far away from the normal logistical hubs. Or it's a temporary setup. For instance, if there is a power plant built somewhere far away, then we also go there with our personnel. We set up a workshop. We have a concept to do that very neatly, very quickly, to service a project for perhaps 24 months. And finally, this step again with a connected vehicle. This is going to give us huge opportunities to go from being reactive to being proactive in the way we maintain and repair our vehicles. Two examples I would like to take up here. One that we're performing right now, that is on the driver coaching, driver training side. We do driver training since many years. It's a service that Scania offers. It's a classroom-based training combined with some test driving in a vehicle, applying the theory. That is very successful. You reach very good results. You gain 5, 6, 7, 8% of fuel, and you have less wear and tear on the vehicle. The problem with this is that the driver go back to old habits. It takes 3 months, it takes 6 months, but inevitably goes for all of us, by the way, we go back to the old habit. Thanks to the connected vehicle, we can now add on a new service to this, being driver coaching. Having the vehicle online, calling up the driver, you have real-time data from the specific vehicle with the specific driver, and you can actually coach that driver, let's say monthly, which is the normal frequency. And thereby you manage not only to keep the level from the initial classroom course, but actually over time improve and improve and improve. So Scania's idea of continuous improvement applied into a service product beneficial to all customers. That is today. Tomorrow, remember the last picture with the assistance van parked by a broke-down truck on the road. Driver calls desperately our assistance center and needs help. We manage to solve it normally, but it takes time. Tomorrow, the truck will call. The truck will call our assistance center and say, hey, I have a problem. Part of me is going to break, needs maintenance or repair. Imagine, for instance, it's the generator where a sensor is detecting high temperature or abnormal amount of vibrations. The assistance center can then proactively call up the customer driver and say, your vehicle will have a problem. We need to take it into one of our workshops. We can see that you're on your way through Germany, for instance, towards Scandinavia. We have reserved a slot for you in our workshop in Hamburg. We have made sure that there is a generator waiting for you there. We will change it in 1.5 hours. This might sound like science fiction, but this is tomorrow, but it's really tomorrow. It's not in a number of years. So this is what connectivity is going to bring to the service part of this business. Of course, you can take that thought further, and there is absolutely no limit to what we can do with that kind of information. Just a couple of examples. Then we need to have an extension or a strengthening of the service portfolio in more ways. So we need to come from being much more reactive to be much more proactive in many ways. I mentioned superstructures and trailers. That is not manufactured by us, at least not normally. But it's built onto our chassis, and it needs maintenance. There's no doubt about it. It needs repair, just as the Scania chassis. So the one-stop shop concept is gradually being applied throughout the world. This for us means that we need to train our service technicians in handling different kind of technology. For instance, they will have to be able to handle cooling system, which is very common in food distribution. They have to be able to handle hydraulics for different kind of lifting equipment. They have to be able to handle ADR, so dangerous goods, which takes a lot of training and a lot of certificates and so on. But we are building those capabilities into the system now. And of course, parts margins are not as good because we have normally only one layer of margin here. We are not manufacturing the parts. But there is another big upside, and that is that we are utilizing our already installed capacity of workshops, where I can promise you we have capacity. We are normally not running 3 shifts in our workshop. We're normally running between 1 and 1.5. So capitalizing on that, it is a really interesting business. A longer perspective, Henrik mentioned it, we have to think of each Scania vehicle being born in our factory as our child, and it should stay within our care. It should stay within our care, not as today 3 years or 4 years. It should stay with the first owner, the second owner, and the third owner. That puts also new requirements on us. We have to then come up with service product that fits to this. We have to, for instance, start using insurance products for old vehicles. So we have to have a very good control of what the state this vehicle is in. We have to be able to put in used parts that fit with the remaining life length of the vehicle rather than putting in new expensive parts. So, but that is also a mindset change that we are into. Buses, on the picture you have a bus from a bus rapid transit system in Bogota, in Colombia, the Transmilenio. I think it was Martin mentioning those are the most professional operators of transport equipment in the world. They are running 24/7. They know exactly what they are doing. We come in here as a supplier of services in their workshops, in their depots. We have mechanics on the spot. We're working on very strange hours to maintain their uptime. And we have a fantastic parts business. Those buses are consuming parts as no truck. So this is also a very, very interesting business. And this is a growing thing in the world of buses. Finally, something about insurances. We offer Scania insurances, and the Scania Casco insurance is a very good way to offer better uptime to our customers. We know that consistently throughout the system, when you come in with Scania insurance, we can handle an accident, an incident much quicker than the normal system. And we can do it with quality because we only use our own Scania parts in doing the repair. So for us, we have now to start to look upon insurances as a normal Scania repair and maintenance contract for accidents. That should basically be mandatory for all our vehicles. Good. From an increased service portfolio into increased efficiency and quality. Scania retail system. So we started in 2007 to implement the principles from Scania production system that in itself is emerging from the collaboration with Toyota from the 90s. So you could say lean philosophy in a sales and service network. It is a very slow, very gradual process which needs very consistent leadership because it's a change management thing. We are completely changing the way we think and the way we do things. We start now to see the first results, and just like in production, we see much more motivated collaborators, we see a much higher quality, and we see much better productivity. But we also have a customer, and what the customer sees, I brought some examples here on the slide. They see, for instance, time of maintenance going down. Standard maintenance doesn't take 7 hours, it can be done in 4. We see that the productivity or the billable hours per service technician is going out. A new vehicle delivery, we see reduced times with up to 60%, so shorter time in inventory. And we see invoicing lead time. That might not sound so important, but that is really important, that the vehicle goes out with the invoice so that there's not a lot of discussion afterward. That consumes lots of energy and creates distrust rather than trust. In the end of the day, it goes about customer satisfaction. And what we see in our so-called role model dealerships where we implement this system is consistently higher customer satisfaction. And that is very encouraging. Now, to give you a little bit more flavor from the real world here, I brought you a short film with a dealer manager called Gianmarco Bezzi, working in Trento in northern Italy, and having implemented this, and he will talk about some of his results. So.
During the last 5 years, in average, the total market was lower than 50% of the volume we had in 2008. You can imagine the strong bad impact that this volume had on our rolling stock. It means that we, as dealer, if we want to survive, we need to secure more work to our workshop. In other words, it means that we have to widen our service portfolio and be better than our competitor in serving the customer with solution sales.
The customer. Right, here he is. He started as a driver 30 years ago and now owns more than 30 trucks. He's gone from a mixed fleet to all Scania, partly thanks to his salesman, Massimo. Despite his love for Scania, he did not service his trucks there. It was simply too far off. After listening to the customer, Massimo and the service salesman, Ivan, came up with the solution.
Prima la manutenzione ce la facevamo da noi, poi Scania mi ha proposto il ritiro e la riconsegna del mio veicolo presso la mia azienda con la manutenzione fatta ed io ho accettato subito.
This might seem like a one-off good idea, but it's really thanks to applying SRS to structure the sales process. Before, Massimo would be happy with just selling the truck. Now he works towards overall business growth and a dedicated sales team. Key success factors are teamwork, standards, and weekly follow-up, and also management participation.
I consider myself one member of the team. I don't miss one of the meetings, and I try to stimulate and steer the discussion in the right direction.
So is it a success? Well, sold hours in workshop are up 10%. Sales of contracts on new vehicles has reached 75%. Contracts for vehicles older than 5 years have doubled year after year.
So thanks, Gianmarco. So a leadership lesson in 2 minutes, because this is about leadership. This change can only happen with this kind of leadership. So you have to drive your team to change, and you have to be there, you have to participate. There's no other way. This cannot be commanded from the head office. It has to be done in each and every dealership, each every workshop. Therefore, ladies and gentlemen, it's going to take a lot of time, but this is a journey we will never abandon. Right, back to the growth then. And the growth will happen differently in different markets. I will show you a couple of examples. From today, you could say 70% of the service revenues are coming out of Europe. But that proportion is constantly shrinking. Not because we are selling less services in Europe, but because the proportion is moving, the mix is changing. So in Latin America, which is on this graph, of course with Brazil as the main driver, we have seen a very fast growth in revenue over the last years only. You might get worried with the 2013 figure. It seems it's leveling out, but it's not. That is yet another reminder of the painful situation we are in with the Swedish krona. This is transformed into SEK. So in local currency, we continue to have an exponential growth in Latin America. This is the growing population of vehicle that starts to kick in, but not only. It's also a consistent increase in market share of each vehicle out there, thanks to an increased network. We are more present, we're closer to the customer, but also much more service products packaged into the product offered to the customers. What will happen is that this will continue in Brazil, and you know that the vehicle park will continue to grow substantially, but it also spreads. It has already happened in Argentina. It is now starting to happen in Colombia, in Peru, and so on in the surrounding countries. This is very promising for us. Exactly the same development, but from an even lower level, you see in Eurasia. Of course, Eurasia for us is to a large extent Russia. You have heard how the market is maturing from the western regions with St. Petersburg over to Moscow and then beyond Ural into the far east of Russia. And as that happens, we build a network, we get presence, and we start to capture on the rolling population. And this is just the beginning of the journey. Here, as you see on the numbers, there is a lot more to do. But make no mistake, exactly the same thing will happen in Eurasian countries, because it's not only in Russia. Another 10 years behind, there is the huge market of Ukraine, there is Kazakhstan, and we are already present there. Good. So we will continue to drive this development, and to sum it up, we foresee a continuation of the growth journey, but not only, but also an acceleration of it from the 17 billion Swedish krona of today. Our 2020 targets are ambitious, yes, but as I've tried to expose to you today, there is an increased customer demand, there is a growing rolling population down the line, there are many new service products and opportunities in pipeline, so we are going to make this happen. Thank you very much.
Thank you, Christian. All what we have heard from Martin, Henrik, and Christian will of course affect our financials in the future. So now it's time for me to invite Jan Ytterberg, Scania's CFO, up on stage and hand over the word to you, Jan. Please.
Thank you, Erik. Well, nothing comes from nothing, as William Shakespeare stated in the play King Lear. Now you have been listening to how we are going to grow the business, not only with the market, but also in the market. And it's also important to remember when we talk about market, it's not only increasing registration of new vehicles, but everything that the customer needs, the transporter needs to perform the business. To be able to reach these challenging market objectives, there exist certain requirements, such as then, of course, developing new products and services, expand into new markets, into new segments, and of course improve both vehicle production capacity but also service production capacity. And talking about capacity, it can be done by improving efficiency of already installed human resource capacity and capital, and also of course by employing more people, by employing more capital. But let us start with the efficiency as such, and we have been touching on it. There are basically three cornerstones to improve efficiency and productivity. First, the most popular one, economies of scale through growth, and of course creates opportunities to get down the per unit costs, as big part of our cost structure is fixed or semi-fixed short mid-term. Economies of scale is not to do more things, it's to do more of the same things. But volume is important to improve the cost per unit. Secondly then, in order to make our processes more efficient, we work with continuous improvements based on our principles, our methods. We then get a result, and we would like continuously to improve that result. And thirdly, when we come to a situation where our methods and principles are not giving the expected results, of course, we have to make then structural changes. These changes are normally somewhat more revolutionary, as it include then closure of factories, outsourcing of parts and components, or closure of business lines, etc. Efficiency is to do the right things right, and to support this work we are doing, we have, for example, as has been mentioned, Scania production system for production of vehicles, Scania retail system for services, and we have, of course, also R&D factory at R&D, and I also have in administration my own finance factory system. One way of measuring efficiency and productivity is to follow the vehicles per employee in the production, and I think you know it, we have a target to get up to 15 vehicles per employee in the production at the next peak of the cycle. We are presently around some 7 vehicles. Then going into where we have to also employ and put our money into, and that is, of course, R&D. To grow in the market, which we have been talking about, we need improved new products, we need improved services and new services. Subsequently, we will get higher R&D expenses and R&D investments. The increase of customer-driven projects can clearly be seen in our income statement. As you have seen, the R&D expenses increased the last years, and we are presently close to 6% of net sales of R&D costs in relation then to the total net sales. The delicate balance we have to do here is to manage is to increase and sharpen products and service offering, but without stretching the modular system too much, so that we actually risk, in the end, economies of scale. Furthermore, we have to manage the legislation-driven projects in such a way that we can sharpen, at the same time, our offering and our position in the market. And as regard Euro 6, we have still some performance steps left to introduce, which will affect the R&D expenses up until mid-2014. We have a very conservative approach, and I think you know it, who have been following us, as regard capitalization of R&D expenses. We have been capitalizing around 5 to 10% of R&D expenditures the last 5 years, which is then substantially lower than our peers. But since mid-2012, you also notice that this percentage has increased, and we are now up to some 15 to 20% of capitalization. And that will continue to be at high levels also after Euro 6 projects are ended and Euro 6 projects, all of them, introduced. This will balance off the high expenditures of R&D and also the increased amortization, as we will see the Euro 6 projects rolling in to being depreciated over the years to come. If we move over then to the production of vehicles, presently we have 100,000 vehicles of technical production capacity installed. And to leverage on the investments already done and the infrastructure for manufacturing we already have in Sweden, in Brazil, and also in Argentina, the need of higher manufacturing capacity will happen and take place in existing structure. Where to look at assembly, that has not exactly the same driving forces as the manufacturing, and will be dependent on items such as taxes and custom duties, importance to being perceived as a local producer, logistical costs, salary levels, etc. And we have a rule of thumb at Scania saying that when a market region reaches some 10,000 units and the parameters which I've just mentioned exist, then it becomes financially viable to do investments in an assembly in a certain market region. Unfortunately, with the protectionism we see out in the world presently, there could also emanate needs of local production, not only based on volume and business logics as such. The increase of technical production capacity will happen in steps. The first step is to increase technical capacity to 120,000 units. And this is a process that is ongoing. It has a price tag of some 1.5 billion connected to it. The present plan is to be ready in 2015, so we are very much into this right now. 1.5 billion is a lot of money, but as Martin mentioned, we get an increase of 20% of the capacity with just somewhat over 5% of replacement value invested. And that is actually a reflection of leveraging on the current production structure. The next step for us to comply with the things you have been hearing today is to bring up us to 135,000 vehicles of production capacity. And it will, of course, happen when the conditions in the global economy and the market exist. We have a time between 2 to 3 years as we take the decision to go up to that level. To handle the present situation of muddling through that we are experiencing in the global economy means also that we have to have a flexibility on the cost structure to handle volatility and quick changes in the market demand. The flexibility is something we have to build in now in the structure for tomorrow. It is today we create the flexibility for tomorrow. Scania has, over the last 20 to 25 years, decreased the value-added part in the chassis production from some 40% down to 30%. And this has been achieved by focused work to concentrate on strategic parts and components, and the fact that our own value added in electronics, in after treatment equipment, etc., is substantially lower than in the traditional chassis components. Flexibility exists in the present structure we have today, cost structure, as some value-added costs naturally are valuable, such as packaging, necessity, transports, etc. To some extent, it is also valid for personal expenses, as contracts with personnel from manning companies can be terminated and temporary contracts not be prolonged. In Sweden, for instance, we have a possibility to get up the flexible manning in the production up to 30%. And furthermore, of course, we can change shift forms. We can also, in the case of a decrease in volume, take out overtime, etc. And of course, also the common global product and production system is important as it enables flexibility, where to produce based on, among other things, the landed cost at the customer. Then going back to what Christian talked about, investments in our commercial operation, in our service production, as we call it, out in the service network. And they have different dynamics than the production of vehicles. In many cases, there exist possibilities to stretch the installed capacity more in workshops by then improving opening hours and by improving efficiency by SRS, as well as Christian said, doing jobs out in the customer's operations, out in the field directly, so to say, or through mobile solutions. When we are gradually now stepping up to 135,000 vehicles and further on, there will be close to 1 million Scania vehicles in the rolling park globally. To be able to handle that and to service these vehicles, we will also need to invest, of course, in new service capacity. And Scania is one of the most, makes with the most integration forward. It has been a conscious strategy the last 15 years. To control and manage the network is being increasingly important as a way to secure the best uptime for our customers, as a way to control the customer interface, and of course, as a mean to earn more money. The strategy of integrating forward is not an expansion strategy. It's evolved for us rather naturally. And if we divide the world in two parts, so to say, the matured markets and the emerging markets, we can also see two different patterns to grow service capacity. If we start in the mature markets, for us then mainly Western Europe, we already have a strong network, which is to a large extent captive. And where it's non-captive, we have in general good entrepreneurs with a sound business and a sound financial performance. And that's, of course, due to the service and the rolling park they have. As a consequence, the necessary investments are done when there is a customer need for them and they become financially viable to do. The challenges and strategies are different in the emerging economies, in the emerging markets. In emerging markets, we are normally entering the market with good entrepreneurs that build a network together with Scania centrally. Scania gradually increases its participation, and you heard the strategy of always be present with 1 or 2 dealers in new markets. But we then, after a while, gradually increase the participation in the dealer network over the years when the market and customers develop and the investments and stakes for our good entrepreneurs are becoming too high, or dedication or knowledge too small from the entrepreneurs. But many of these entrepreneurs continues with Scania, with the growing Scania business, and we are happy with that, provided, of course, that they provide good solutions for our customers. There exists no strategy that Scania should own all the dealers. On the contrary, it's what they perform that is important. So what we have experienced the last year is that the emerging economies have been growing. We have seen a sharp increase in the rolling fleet, and that the logistical solutions and the customers are becoming more and more advanced, resulting in a need for higher uptime and focus on life cycle profitability. Subsequently, there will be a need to increase capacity in many of these emerging markets. As this is nothing new, the expectation is a similar development as we have experienced the last years, last 5-7 years of an investment around 1 billion per year in the service network. To improve the uptime and a customer focus as well, to limit the investments, we have been talking about mobile solution, field workshops, and taking over operation in our customer workshops, which is, of course, a very lean way for us to grow. Irrespectively, if we are talking about R&D, purchasing, production, commercial operation, administration, we cannot do everything, and we cannot be world-class on everything we do, of course. We have to define carefully what activities, operations, and processes are core, strategic, and non-strategic, and based upon these definitions, what resources shall we have by our own, and what resources can be external. When we define something as core, we will have the knowledge and the resources to perform the activities. For instance, we would like to have full control of resources in R&D and in production of engines. That does not mean that we will do everything, but for the parts and components that we define as core, like the fuel system, like the electronic steering on the engine, we would like to control both manpower, knowledge, and capital. In a service operation, we normally would like to have the full control of the mechanics and their knowledge. But when we define something as strategic, we would like to have the control over the activity, but we do not necessarily have to do it by ourselves. We don't have to employ all the human beings in capital. Most likely, we would like to perform the activity to have a detailed knowledge of it, because if we are buying everything from external suppliers, we will over time lose knowledge, and we will over time also thereby lose the competence to buy. In case of a definition of something that is non-strategic, there exist most likely partners and suppliers that can take care of these activities in a much better way and perform them better than we can, because for them, these are core business. Examples of non-strategic operations are assets and services for PC, forklift trucks, but it can also be administrative parts like accounts payables and accounts receivables. The more demanding customer we have, the more focus on the customers we need to have. This means that we have to take out unnecessary activities that are actually, in the end, disturbing the Scania organization to supply that customer demand. And only also make investment when it's absolutely necessary. Together with the Volkswagen Group, we see possibilities to find structure where we will limit our investments, where we'll create economies of scales, where we will create economies of skills as well. To be able to do this in a smart way, we have to be really good at defining what is core in our products, in our services, in our solutions to the customers. That is creating, in the end, the Scania brand, and that is the best life cycle profitability for our customers in the industry. That we would not cooperate around. The rest is possible to do if it's create a clear corporate benefit for Scania. My favorite example of how we at Scania must think and act when thinking core, strategic, non-strategic is the insurance offering. So we are coming back now, Christian, to the insurance offering. We have to provide something that gives customer more value than just the bread and butter insurance. By linking insurance coverage to the features of the vehicles, the features of the services that decrease the risk of having an accident, the cost for the insurance company will go down, and thereby the premium for the customer will be decreased. An R&M contract, locally selected safety features, connected vehicle with driver training, driver coaching, these are things that decreases the risk and qualify then for a discount on the premium. And hence we can easily package this together then with the total offer of the vehicle and other services. And when there is an accident, it is of utmost important to get the vehicle back into operation again as soon as possible. And by taking care of the claims ourselves, we have all the power to take care of our customers in a professional way and in a swift way. To get the vehicle back on the road again, because that is what it's all about. Or to supply the customer with a rental truck immediately so that he or she can be able to perform the transport job that has been interrupted. At the same time, of course, we secure that the accident repair ends up in the Scania workshop and the gain on that repair ends up in the Scania organization. As we can decrease then the total time and the total cost of an accident for the insurance company, it also, in the end, reduces the insurance premium for the customers. So the customer value is actually created when we package the vehicles and services that reduce the risk of having an accident together with the claiming and process and handling of that claims we do in-house. That is core in this solution. The insurance as such is not core. It's not done by us. It's done by someone else. We have been talking about financial services since we have been touching insurances, and some words about them as well. With increasing volumes and business, we will of course experience also an increased customer finance portfolio. The expansion of the portfolio will be of course a reflection of what we will see on the deliveries. Subsequently, for us then in financial services, mainly take place in an increased portfolio in the emerging markets. Furthermore, in emerging markets, a good financing offer is in many cases decisive to even do the business as such, which results, of course, in high penetration of financing for financial services in those markets. But we are also having high penetrations of financing in many mature markets as well. And that is, of course, due to that banks and leasing companies have become reluctant to finance in general and to finance our customers particularly. The banks would like to finance Scania, who take care of the financing and the risk of the transporters, and that is what's happening. As the risk appetite hopefully returns into the banking sector, we would like to see somewhat reversion of that trend we have seen the last years. But we will not come back to the, let's call it, crazy situation we had before 2008, 2009. The good thing with what has happened is that risk has been adequately priced since 2008 and 2009, which is also clearly seen in our existing portfolio. Financial services will be and is an important tool for us to improve and maintain the Scania market share. And provided that we see no major changes of the view of Scania from a credit perspective, the expansion of the customer financing is possible to handle alongside with all other activities, investments we have been talking about recently. And so with the current funding structure where we use vehicles and services to be financing financial services, we see that this will be possible to handle. Securitization of financial services assets is possible to do, but the price and complexity have so far at least made this solution unfavorable for us to do. Something about financial performance going forward. This mind map we often use to describe how we must think to make improvements sustainable. I always say to you that give us a target and we will achieve it, but it will only be once. Sustainable improvements is what it's all about. A cornerstone in our way of working with values and principles and methods are then continuous improvements. For me, the ultimate answer to whether we have improved or not is to read the financial performance of the company. That is the receipt that we would like to get when we are managing the business well, and we are managing the stakeholders well. So when our ambitions are increasing now, and we are investing in capacity for production of vehicles, for production of services, when we are entering in with new products and new services and in new markets, we need to get a payback on these investments and to get the volume. That was part of all these good business cases that we had in the background when doing these investments. So we must simply execute on what we have promised. We have invested for growth to achieve sustainable profitability. And from where we are today, with the structure, with the cost we have, with the capital we have, and where we will be tomorrow when doing this, because this is already happening. I mean, we are talking about things in the future, but of course, to do that, we must do it today to be able to have and reach the market objectives tomorrow. From where we are today and where we will be tomorrow, there exists no profitable stagnation for us. We have said that we must be able to come back to our old benchmark of profitability that we saw in 2007 and 2008, and that we saw in 2010 and 2011 when we talk about vehicles and service segment, our main segment. And we define it as a return on capital employed that should be over 40%. This will be achieved through improved capital efficiency, meaning that we must leverage better on the capital and people we already have invested in, and of course, also a good profit margin. Growth is important, but we cannot lose out profit margin. Easy calculation, 40% can be reached by having 10% of EBIT and having four times capital turnover rate. Reflection, we have only been at the best in vehicles and service segment of 3 times capital turnover rate. And of course, if you have 13, 14% of EBIT, you get there. But of course, this is a combination of using what we have better by growing, but also not lose out on the profit margin. 4, financial services. The contribution of financial service segment to the total Scania business is actually not seen in their income statement and balance sheet completely. But the business to finance customer and manage the credit risk is. That business must continue then to deliver as a minimum 10% of return on equity employed, or return on equity, and continue to increase the customer loyalty, as well as giving more service work to the service operation through insurances or other services. Growth with profitability is beneficial for all stakeholders at Scania. And this slide is what our shareholders have experienced in the past, and that is the path we have to secure also for the future. Combining growth with profitability can never be wrong for the shareholders. Scania does not have any firm target of dividend. The dividend is decided by the possibilities to handle negative cash flow, the negative cash flow a dividend create, and the need of good credit rating for financial services, so that we are able to finance our customers, good credit rating to make the investments, get the money to make the investments in R&D, in production, in commercial operation, etc. Other cash-related issues that we might have. We had a 800 million payment going out here in the first quarter 2013 to a pension trustee. And of course, the visibility in the future of the business climate, our business, among them, of course, other things. Our historical benchmark is a dividend of around 50% of the net income, which could serve as a base for estimation also going forward. 2 times during the last 10 years, the circumstances have permitted Scania to make special dividends. So in total, Scania has during the last 10 years paid some 42 billion in dividend to its shareholder. A quite impressive amount, actually. In relation, we can say it's representing close to 40% of today's market cap. I think Scania is a very interesting investment case. And now, Erik, you know at least where you should put your money when you invest in the stock market.
Thank you, Jan. I will buy, I promise. Time now for us to say goodbye to the audience that has followed us via the webcast.